curious people, Assalamualaikum warahmatullahi wabarakatuh. Welcome back to the financial class. Olivia here with you to discuss about financial issues. Okay, in the previous video we have talked a lot about how to managing current assets. So in this video I will guide you to how analyzing current asset and current position from the company. What's the company we need to analyze? We will analyzing of the Unilever's company. Yay! So just let's get right into it. But hold on, before we get into analyzing Unilever's financial statement, I will discuss a little bit about why managing current asset in a company is important. Firstly, it's because they contribute to financial stability, liquidity, and cash flow. Having enough current assets help a business meet financial obligations, maintain positive cash flow, of course, and sustain growth. And secondly, current asset can help you monitor your liquidity to assess the overall financial health of your company, identify trends, and make a better decision about pricing, production, marketing, and allocating resources. So let's get right into analyzing. Alright, here I have made summary in Excel of financial statement of Unilever company. But if you want to see the more complete Unilever financial statement, you can just directly visit their website and access their financial statement there. But now from this financial statement summary, we will analyze the liquidity only. Therefore, here I present you the balance sheet, income statement, and ratio, also cash flow of its company. Alright, first let's look at the three most important things in current asset, which is cash and cash equivalent, account receivable, and inventory position. We see here that the position of cash and cash equivalent in Unilever tends to fluctuate. Even they lose their cash in 2020 until 2022. Their cash inflation, you can see in the cash flow, their cash reach into zero value in cash taxes paid. And then moving on into their account receivable. When we look at the account receivable, it can be seen that although the account receivable did not reach into zero value, the account receivable at Unilever also decreasing in the terms of a year. Meanwhile, the inventory tends to stabilize around the 2 million or something, so the inventory situation remains stagnant. This is also sustainable with the amount of revenue that continues decline. You can see in income statement, the revenue continues declining from the year of 2020 until 2023. So we can conclude that Unilever's sales condition have decreasing since 2020. So we see in the liquidity ratio, from 2016 until 2020, Unilever has never reached to the number 1. This current asset ratio shows us that Unilever can be said to have never been able to fulfill its obligation to pay its short-term debt. This condition is like when you have debt with 1,000 rupiah, but you only have 600 around rupiah. So can you full pay your 1,000 rupiah debt with just 600 rupiahs that you have in your pocket? Of course not, right? So, well, that's the condition of Unilever based on its financial statement. When we move to the quick ratio, where the quick ratio calculation can be considered more realistic because it does not include inventory in the calculation of its assets, but still it turns out that inventory does not have a big impact on this company, even though we know that Unilever is a company engaged in consumption. Now, to know how the condition of an inventory cycle or turnover in a company, we can see it from the inventory turnover itself. When we see the inventory turnover itself, a good inventory turnover ratio is usually between 4 and 6 or 5 and 10 for most industry or big companies. Good a good ratio means that level of inventory turns and sales is balanced. So we can see here that Unilever inventory turnover ratio is quite high, hovering around 7 until 8. This means that Unilever has a good inventory turnover, aka they don't hoard a lot of inventory. It's because they have the fast moving consumer goods or FMCG system maybe. And then moving on, now it's time to see how its case and its receivables turnover position is. It can be seen here that the cash ratio from year to year is very small, only around the lift of 0.03, even to the highest in just 0.09 in 2023. But it is still relatively small because it is not even able to touch to one value. However, if you look at the receivables ratio in this one, this ratio has decreased in 2020 and 2021, but finally rose again in 2022 and 2023. It can be seen that Unilever tends to use a receivable system in their sales maybe. Actually, there are two possibility why this happened. First, maybe during 2022 until 2021, it was ramped COVID, so Unilever as a company engaged in consumer goods might provide relief to its customers, which at that time the economic conditions were very complicated and chaos in Indonesia. So it's okay to have a lot of receivables account, but at the end of the day, the important thing is that the goods are still sold, right? Or maybe in the second probability, they also just like to collect receivable. You never know at a big company in consumers goods. Alright friends, from the result of the analysis of Unilever's financial statement, we can conclude that company's current asset position is currently not in a good condition actually, seen from the result of its calculation of the current ratio, which continues to decline and a very drastic decreasing in the year 2022. Current asset position since decreasing. So we can see that Unilever have already not in the good or not in the help positions in these years actually. Okay, that's all from today from analyzing Unilever financial statement. Thank you so much for watching my video. See you later. Bye bye.